Carl, let's begin with you. There was sort of something for everyone in this jobs report. There were numbers that went up a little bit that make you think that the Fed is going to sort of pause in September. What do you say?
Yeah, there was definitely some hot and cold elements to this. So I think everyone will kind of focus on their own particular angles of the report. But, when we look into the details of the report, you see back revisions, but a longer work week. So I think net, this was actually a stronger than consensus expectations report, even though we saw that rise in the unemployment rate. The rise in the unemployment rate was really just a flood of participants re-entering or entering for the first time into the labor market. It wasn't the kind of bad kind of rise in unemployment that would be softening of labor conditions. So this is just a flood of participants who didn't happen to find jobs. This shows that the economy still has a lot of momentum heading into the back end of the year.
So if this is a stronger than expected jobs report, does that then translate into the idea that the Fed will be more aggressive in its interest rate policy and raise rates maybe in September? Or do you think they pause?
I don't think for the September meeting. I think they will pause in September. I think there's enough. We said something for everyone. I think there's enough here for the moderates to make a case for another pause, or they can bill it as a skip if it's a close call like they did back in June. I think this will keep the hawks on edge that maybe they need to do more, but they won't feel the urgency to do it in September. So instead, the market pricing will continue to toy with the potential for a November increase. But ultimately, I think that we are losing momentum, and by the time November rolls around, it will look like they've done enough.
Yeah. Ron, even if the Fed does keep rates on hold, we're still living in an environment where interest rates are high. How does that get priced into the market? And can this market rebound now as we enter the fall?
Well, yeah, Sam, I think it already has. I mean, if you look at the S&P, the NASDAQ, and the NASDAQ 100, we've already put in a year's worth of good work without having the Fed really alter monetary policy in any way, shape, or form, and still have that worry that they could go again. I doubt that they will, as was just stated. And I do think that the employment report this morning may have been a little bit weaker under the surface. When you look at the household survey, it was over 500,000 people who lost their jobs. Yes, they may have been re-entering the workforce, but it's a different look. The downward revisions were significant in prior months. And so I think it's going to be a choppy market. I don't think that, with the VIX at 13 and with still some, existing concerns about where we go from here, the markets will probably chop around based on, digesting the gains that we've seen thus far. But I don't think the Fed has much ammunition to raise. And again, I went Goldilocks on the economy 2 months ago, and that's still where I am.